Ladies and gentlemen of the jury, today I defend Bitcoin. I will make my case that Bitcoin is innocent of being overpriced in US dollars. Let the record show I'm reciting this on March 10th, 2025. I will lay out which market Bitcoin is competing in, identify its competitors while looking at their corresponding market caps, and we'll talk through what I see as a very asymmetric opportunity. While I'm talking, please be quiet, but if you want to make a comment, be it good, bad, or indifferent, or an ending verdict, please do so in the comments below. And while you're at it, please click that subscribe button. Jury members, gone are the days of saving your blood, sweat, and tears in fiat dollars. That is currency issued by decree by your governments with no hard assets backing it up. Not only are you working all day and getting paid in something that the central banks can print at will, but they, as well as virtually every complacent government before them, have shown again and again that they cannot resist the temptation to do just that. Let that money printer go burr. This is a violation of your property rights. Full stop. I want you to do something for me, jury members. I want you to try to print money. What will happen? Won't the government label you a counterfeiter? Won't they throw you in prison? They, however, get out the printing press and they call that quantitative easing. Deep down, baked into your being, you have been trained to do anything but save in the currency that you work in. Call it speculate, invest, and or spend. But those terms in modern times have been convoluted. And I would say that our people have been forced, whether consciously or not, into gambling on future events because they can't trust the currency. If you want just one example, how this money printing can go astray, leaving savers of fiat currency decimated in its wake, I give you Exhibit A. Perhaps the most iconic historical printing performance we've seen to date, the Weimar Republic's hyperinflation after World War I, linked below for future reference. So what have we been transferring our currency to that will preserve the purchasing power over time? Owning gold, owning a 30-year mortgage, investing in stocks, buying bonds, stockpiling tubes of toothpaste with that Costco or Sam's Club membership, or convincing yourself that your Pokemon card collection will put you through college are just some of the things that we have been trained to do to combat our currency units buying less and less over time. As a wise man once said, there are no solutions, only trade-offs. And all of these store of values have their own pros and cons. Some of these versions of wealth are easier to move. Some are not. Some are more divisible. Some are not. Some you can pay your taxes in, and some you can't. I look not to eliminate or discredit any of these assets, but only to bring the relative percentages to light for assessment. All this to say that Bitcoin is competing not in the payment arena versus the likes of Wise, PayPal, or the like, but other stores of value. These are assets, some would say products, that have been incorporated in our cultures that transfer wealth across time. At the end of the day, we don't care about how much money we have. No, we care about how much stuff and how many services we can buy. Before I estimate the market of store of values, I'd like to start with Bitcoin's valuation today. While there will eventually be 21 million Bitcoins in circulation, today we sit at just about 20 million. We take this number times the $80,000 per Bitcoin we see today, and we get a total value of $1.6 trillion. This may sound like a lot, but let's look at the competition and see where Bitcoin stacks up. I think it best to dip our toes in the store of value scene before we get into the big guns. One thing that always struck me as crazy was art. Now, I'm just a simple man, ladies and gentlemen, but did you know there are people that will buy art, not to hang it up in their house to look at, but just to keep it in a temperature-controlled storage unit? When you have tons of money, you'll need to find ways to store it. My back-of-a-napkin calculation, almost certainly conservative, but if I look at the last 8 years of art sales and guesstimate that art might turn over every 20 years, I come to about $80 billion. Once again, almost certainly conservative, as some of the most famous paintings never sell. How does one even calculate the market value of the Mona Lisa? Collectibles, sports trading cards, toys and coins and stamps are another $620 billion. But now we get into the behemoths. Gold, with a market cap of $18.4 trillion, does have some industrial uses, but estimated at only 11%, bringing what I'll argue is the segment of gold's market cap dedicated to storing value across time to almost $16.4 trillion. But then we get to the next year. Many people hold some cash, even if it's probably not to preserve their value over long time frames. After all, their bills need to be paid and one's taxes are owed in the domestic currency. The storied 60-40 portfolio of equities and bonds, which have been a staple for saving for retirement, add $250 trillion. I want to make a point here that stocks and bonds used to be called investing. Now we consider them saving. And saving because our fiat currency doesn't do that well these days. But that's not all. Last, certainly not least, and actually most, is real estate. Global real estate was estimated at just south of $380 trillion. Now, everyone needs a place to live, but not all real estate was bought for that individual to live in it. How many people do you know that buy houses to rent out to others, to have second homes, or simply let parcels of land, some with homes and some with not, sit vacant? In China, for example, it's estimated that 20% of the supply isn't even lived in. While I think one could make an argument for 100% of the real estate market cap being a store of value, I will only allocate 50% of it just to show you a conservative estimate and to acknowledge that at the end of the day, we do need shelter, store of value or not. And I leave it to you to determine what you think real estate store of value component actually is. Ladies and gentlemen of the jury, all this to say that Bitcoin at a $1.6 trillion market cap is but a drop in the bucket, a mere 0.3% of all the store of values. And in fact, it's probably lower than that because I must have left some things out. I hope that you have felt I have done a decent job helping you see the market that Bitcoin is competing in and its value in relation to the other competitors in its market. Ladies and gentlemen of the jury, like I said before, I'm a simple man with a simple brain, but I believe Bitcoin is innocent of being overpriced. While no easy quest, I admit, you'll have to parse out what percentage of assets' market values are due to it being a store of value. This is a key variable to consider when asking yourself if Bitcoin is high or low. I leave the verdict to you, which I hope you'll share in the comments below. And if you got value, it'd be awesome if you did me a solid and hit that subscribe button. Thank you.